Hey guys, this is Market Update. In this video, we'll talk about if a recession is going to derail this bull market. Are we going to get a crash? We're going to get a spike in unemployment that brings us lower. The crypto markets in general, may be a little bit undecided. This is ETH. It's really fallen off its high. You can see this. It's broken its structure right here. Down at a lower low, which is not looking great. Bitcoin is actually still in its trend, hasn't broken its structure. You can see the support level here. It's actually fairly strong, right? We are still within this kind of distribution pattern, unfortunately. But right here maybe is a little bit of a support level, but can be easily broken as well. But in any case, nothing's moving, right? And that's because people are really kind of scared about unemployment's ticking higher. And that means potentially markets start to worry and blow up. Is that something we should worry about? We're going to talk about that in this video. But for right now, like I said, Bitcoin still within this structure. Support at 58,000 is actually getting stronger. Hasn't broken its structure. It's still a bullish structure, even though we're getting this distribution here. Right? We're still essentially printing higher highs still. And for ETH, it has broken its structure. Not great. However, if you're in a bull market and you really believe in these assets and you think they're going to grow over time, these are times to buy, right? You have to buy at weakness when it comes, when it looks like it's broken structure, everyone gets bearish. No, I don't really buy into that. These are assets that have huge amounts of growth, and you're going to have to buy them when, people are selling off, right? If you'd have bought right here, when you say, oh, it's broken its structure, terrible. Well, 6 to 8 months later, it's just recovered, right? So you have to buy assets that you want to buy when they're looking pretty weak. ETH is looking pretty weak. Bitcoin, it's actually not weak at all. People are just bored because it's basically not doing anything, but it hasn't broken its structure and it's still strong in my opinion. If you do trade, check out Bybit. I trade on here up to $30,000 as a deposit bonus. If you are new, check the link below for the details. There are a lot of fears about a potential recession and slowdown, but to be honest, I feel like we've been in one for multiple years at this point. And a lot of the data that we used to look at, I don't think is that relevant anymore. A lot of the data that was very important over the last few years, pretty much like inflation, and how much money was being created. That's not really the issue anymore. And it's more on the fiscal side that we have to look at. Despite all of the huge fiscal deficits rolling in, GDP, is rolling down. Inflation is rolling down. And that's kind of worrying because if the fiscal side and all of that stimulus isn't pushing us higher, then, how is the central bank or the government going to react? These are unanswered questions because it's much more opaque. How is the government going to react? Are they going to put more stimulus in? Well, that requires spending bills, takes a lot longer, unless there is a crisis, right? And so I think that's what the issue is right now, is that some of this data it's okay, it's not a crisis, and so no one's going to move without a crisis. So is a crisis required in order to get another movement, right? And you can't really trade for that because you just don't know if that will happen or not, right? And so it's very difficult right now to try and figure out where the next move is. If we look at inflation, you can see this is coming way down, right? So we're now pretty much within the range that is expected for inflation. If you look at the Eurozone, it's pretty soft, right? You've got basically the main drivers here, France, Germany, under 2% inflation. Eurozone in total is 2.2%. US is coming down, it's 2.9, but it's coming down, right? It's coming lower. Inflation's not an issue, at least for CPI. If you look at core PCE as well, it's coming right down. So the 3 months annualized is 1.7, right? Then you've got the 6 month annualized at 2.6. So it's coming down. So the worrying thing here is that if inflation is starting to come down, potentially GDP starts to come down as well. And then everyone starts looking around saying, wow, growth slowdown, not great. Despite all this stimulus, that stimulus is not going to change quickly. That's government side. It takes a long time to kind of get these spending bills out unless there's a crisis. And that's the issue in everyone's head, right? It's like, do they want to wait for a crisis in order to move? That's not great. And the election. So it's very normal, I think, for markets to be taking a huge breather here and just saying, look, we need to kind of wait for what's going on. Why should I bid up prices right now, right? Now, as an investor, I think these are the times where you just be consistent dollar cost average and try and get some decent prices for your assets because the long-term trajectory. I've seen it on this channel 100 times over, 40% a year. That's what Bitcoin is annualizing at. If you just have a longer term view, you don't have to worry about this stuff. But the short term, you see unemployment here starting to tick higher. You can see each time it starts to tick higher, it doesn't really stop. So that is the issue, right? Are they going to, from the central bank side, flip really quickly? Do they require a mini crisis to happen before that? We don't know, right? But look, ETH is what, 40% off its high. Bitcoin around 30% off its high, 25%. Kind of normal drawdowns within bull markets, to be honest. So I think it's just a lot of indecision right now in markets, and they don't really know where things are going to go. Do we need that mini crisis to happen? Has it already happened? Right? Was the the yen carry trade crisis, was that it? Barely even shows up on the chart now. So I just think the market is kind of undecided and waiting maybe for the autumn election to come out, some clearer data. But the crisis doesn't really seem to be happening because of the fiscal spending. Maybe that spending can actually just get us through. I think the actual recession has been rolling for a few years, and it's actually the fiscal deficits that have kind of masked it in some areas, keeping GDP a little bit higher. And you can see the central bank tried to slow it down a bit, and now they're starting to cut rates. They will be cutting rates in order to try and stimulate again. You can see that right here. So this is the Fed funds rate, effective Fed funds rate, around 5%. We know they're going to start cutting, right? So cutting rates, they think that GDP and inflation is going to start coming a little bit soft, and so they're going to be cutting again. Again, like I've said on the channel multiple times before, most cuts are bullish for markets within 12 months. It's just those massive recessions, 2000, 2008, where the cuts are a panic and you've got a huge worldwide financial crisis. That doesn't seem to be happening this time. Could happen, yes, but I just think we have to invest through this time because the odds are in our favor for doing that. Yes, we might have a financial crisis, but you know what happens after that. Huge stimulus money printing. Every other scenario, you just have to invest through this time because every other scenario, 12 months after the first cuts, is positive for markets. Recency bias is something to be aware of, I think, because 2008 was such a horrible crash, but that is an outlier. That's not the norm. In crypto, recency bias is looking at the previous cycle and just seeing everything explode. Well, there was helicopter money. There was the biggest stimulus we've ever seen. That is not the norm. That should not happen this cycle as well. So what you're going to get is assets that are genuinely strong performing quite well. And a lot of the others that aren't that strong, they might not perform that well. Why would they if there wasn't this huge helicopter money, which we should not expect? So if we actually look at this bears out in TradFi as well. You have the S&P 500 here over the last 13 years, annualizing at around 13%. If you go down to the mid caps and small caps, they're annualizing at around 9 and 10%. So they're not outperforming the S&P 500, right? So that long tail, why invest in it? Maybe if there's an index like a crypto 500 index, you just put your money in, it's like, yeah, whatever, it's an index, who cares, right? But they're not outperforming the big assets. If you look at the NASDAQ 100, that's annualizing at 18%, which is outperforming everything else, which is an even smaller amount of companies because you're investing in the best things and the strong things. So within crypto is just one industry. Why would there be 500 assets that perform extremely well? It doesn't make much sense. It's not logical to think that. You'll have a few assets at the top that perform very well, and their annualized returns are going to go down over time as they mature. And then the rest is going to be this kind of, mix of some doing well, some doing poorly, but overall, the annualized returns may not outperform the actual strong assets. I think the reality is there's only a few really investable assets in crypto. The rest could do well, they're very speculative, and a lot of them, are just not going to go anywhere. For example, we've seen that in this cycle. Now that the helicopter money is gone, the cycle feels different. It feels like the strong assets are trying to perform with obviously excess volatility versus something like the S&P. But the strong assets, you can see them. And then that kind of mid-section of, all these L1s, no one's interested in them anymore because they're not using them. And then you just have this complete degeneracy, gambling of meme coins and celeb coins, right? Because the pretense of saying all of this technology is going to change the world is kind of gone a little bit because the helicopter money isn't there to flow into it and you're not getting the price action. So obviously, narrative follows price. So you've gone, investable assets, essentially Bitcoin and ETH now with the ETFs, and then maybe a couple of other L1s that are trying to, get up there as well, like Solana, maybe a couple of others. But then the complete degeneracy of, look, we're not going to get a lot of these ideas pumping because the money's not there, so we're just going to gamble on these things. It's bifurcated like that. Obviously, gambling is not investment strategy. There's only a few assets. So you have Bitcoin, ETH, store of value, digital capital that you can move around quickly. You have stable coins, which is essentially issued on ETH, right? Very, very clearly, they have huge product market fit. So stable coins are in demand. Digital capital is in demand, but it has to be trustworthy. The rest is like very, very speculative, and it may not outperform. Over an investment time horizon, you're going to get outperformers. You're going to get some that don't. So trying to invest like that, like Solana's outperformed. But if you also had bought, Avalanche and a couple of others, maybe your actual percentage returns aren't that far off just buying BTC, right? So you have to make these decisions as an investor. Stablecoins are clearly hugely successful, but you can't invest in them. USDT or Tether, private company. Circle, private company. They are going to IPO, but you can't get them into them in the crypto space. This is really the use case of crypto, right? And stablecoins is to reduce the cost of sending remittances down from 6% to 0. But again, it's a boring use case. It's not a speculative use case. And if you want to make money from that, investing in the dominant players, so Ethereum, where the vast majority of stablecoins are issued, and then you've got Coinbase, Binance. Can't invest in Binance. Coinbase is a stock. So the crypto industry is much smaller and much more concentrated than it seems. A lot of speculation and some winners at the top. I think the winners at the top are very clear to see who they are, right? Ethereum, around that, you have big businesses built. Most of them you can't invest in. But 6% out of remittances is a huge use case, but it's not very interesting for most people. So the interest goes. But that's where investors actually make money, is investing around this with companies that can dominate in these flows. So if we do have another normal Bitcoin cycle, we'd be looking at another 12 months of very decent price action for BTC. And let's be honest, that is going to drag up a lot of altcoin prices as well and bring speculation here. So there's a lot of opportunity to make money trading. But I think for most normal investors who just want to put money aside, the strong assets are the place to be. You're going to get the best risk-adjusted returns there. I've not seen anything yet that really suggests why altcoins would continually outperform here. It's just my opinion. Let me know in the comments if you think I'm wrong on that one anyway. Bybit deposit bonus, if you do trade crypto, down in the description, up to $30,000. Just click the link for the details. I'm James, this is Money's EG. Cheers for watching, and I'll see you in the next one.